Welcome to Own the Chaos. The stock market is crazy and chaotic.
And crash. You son
Oh, God. Hold on. Pause.
Brad and Fat Man Zoom are here to help you own it.
They were targeting Wall Street when they should have been targeting Capitol Hill. They should have been targeting DC. This is the same thing, and this is what people keep missing.
Taking it to the suits, being relatable and hilarious.
You bought GameStop at 400, didn't you? To the moon, baby. To the moon.
Get ready to own the chaos in 3, 2, 1.
What's up, everybody? Welcome to Own the Chaos. My name is Brad. That is Fat Man Zoom. The stock market is crazy and chaotic, and we made it our mission to help you guys own it. And guys, it has been another crazy day in the stock market. We're going to get into all of that. Before we do, as always, we're going to hit you all up with the starting five. Fat Man Zoom, take it away.
Starting five, we have housekeeping, Mike Hudson, John Gosson, Rudy Brown, and Matt Arnold. You are starting five, guys. We're at Stock Market Live, and today we have some headlines, some really good headlines. Overall, we're going to talk about the overall market. We see the yields go down, but yet the overall market seems to still be challenged, specifically the Qs. And are we now in correction territory? Is it a good time to find an opportunity to start scooping things up? And we will talk about the opportunities that we've been scooping things up. How's your day, man? Why don't you give us an overall sentiment of your day?
My day sucks. This whole week has sucked. But I ended up, enduring through the pain and bought some stuff today, even though things were coming down. I ended up getting into Marathon Oil. I actually cut some stuff that I thought deserved to be cut. I actually ended up cutting Disney because the break even on those calls weren't great anyway. And so I ended up basically selling that for no gain at all. So I took that free cash, bought up Marathon Oil. We saw oil hit $87 a barrel. There's really no stopping oil right now, oil prices, unless the government steps in and decides to, open up the SPR a little bit more. Maybe that's their play. I don't know what the White House is planning on doing as far as that's concerned. But so far, there's nothing stopping oil from going to $100 a share, and that seems to be a distinct reality. So I actually got Marathon on the dip. You guys know I was in Marathon, ran it up, sold it, not quite at the top, but pretty close, and then it ended up breaking out of its trend. Today, it looked like it gave me an opportunity. Even though oil was up a lot, Marathon was down, so I decided to take another stab at it. So got some calls on that. Ended up buying some more stuff up as well. One of them, and it was interesting. I mean, my Ford calls, obviously, I think that's probably the big story today, especially at least for my account. That Ford just got absolutely rocked. I still have 75% of my position that I took off of Ford, but it still takes up a huge chunk of my portfolio. Right now, it's still taking up 30% of my portfolio, which I don't know how responsible that is, but nevertheless, it's done so well for me that I'm playing with house money, and it's painful to see, but I think that this is a distinct overreaction on Ford. So I actually ended up buying more Ford. I got $24 calls on that short term for March, shortish term for March 18th. And I have some theories about that, Fat Man Zoom. So we're going to get into some of that. But I also bought Rocket. And I thought Rocket was a good buy today. Risk reward, we saw some was good. We saw some upgrades on that. They don't have earnings until about a month from now. So I think that's going to be pretty interesting to see. And I think that's all the purchases that I made. And I'm really just kind of watching and waiting and seeing. I got out of my Bank of America. They did really well on earnings as expected. They had a nice pop, and then everything started to fizzle out. So I decided to get going while the going was good. So again, used some of that cash to buy some of the stuff that I bought today. But it's been rough. I'm down well into the 5 figures over the last 2 days. And it's painful, but if there's one thing that the market has taught me is that I just have to kind of stick to my plan. And so that's what I've been doing. I bought into some good quality stocks, bought back into energy, things that I still think are going to do well, despite some of the volatility that we're seeing today.
Yeah. And then we'll get into the specific stocks, but make sure you guys stick around. Obviously, for those of you who haven't been here before, we kind of discuss the overall market, the headlines, whatever our topic of the day, which is the Nasdaq, but then more importantly, we have earnings. So we have United earnings, we have Alcoa earnings, and maybe if some of you guys are interested in Discover earnings as well. Once the bell rings, we'll actually turn our attention to Twitter and to the charts to see if they're moving and see the reaction on that. So make sure you guys stick around. Hit that thumbs up if you're liking the content. But I want to get into the headlines. So things that stood out today. You just mentioned Rocket. I did want to bring up Rocket. They got a double upgrade. And, the question that comes to mind, and I said it in the watch list and I said it in the level 3 this morning, is it's more of a rhetorical question. Has Wall Street, are they starting to finally find out what we've been saying about Rocket, which is massively undervalued, profitable, fundamentally strong, looks really good, and it's just incredibly undervalued. We've talked about value stocks and how they should win the day. So real estate and their diversification within their service offerings, it seems like this could be the beginning of the move for Rocket.
I think so too. And I mean, we've been wrong about this before, and we've still had conviction on Rocket, but this is a classic example, and we've talked about this before, about good companies where the stock just sucks. Good company, bad stock, and I think that this fits that bill, obviously. But when you look at the 4 PE that is at 6 times next year's earnings, and it's the market cap's around 23 billion, that's still very, very, very undervalued. And this is well below its IPO levels, obviously. I think what saves this Fat Man Zoom, and this is what I'm kind of like looking forward to, does Rocket start to implement a regular dividend? If that happens, I think that's what really should get Rocket going, so the buyers could come in here. And that's what I'm looking forward to. This is me purely speculating on this, so I don't have a giant position in Rocket, but I thought it was worth taking a chance on with a couple grand. So that's what I ended up doing. Got some calls for this out in March. And so to me, this seems like a really good opportunity. I mean, he hit 52-week lows again yesterday. And with the pop here, with the upgrade, it seems as if now could be the time to maybe consider at least taking a flyer on it and adding to it if it continues to make that move upward.
I would say a flyer is definitely makes sense. And I still wouldn't rush to get in this thing while the news is good. And this is sort of the beginning stages of what it would take to turn it around. I think we need to see more analysts start speaking towards this, initiating coverage on this. I think that's going to be something that could potentially move it. I agree with you as far as a dividend certainly would do just that. So you're either looking for earnings, an incredible surprise, or you're looking for news as far as buybacks could maybe impact it, but a special dividend or a permanent dividend on top of upgrades should feel really strong about that. But, this has been sort of bleeding out. So I would still be cautious on this. There's still a lot of room for it. And who knows, maybe this sort of gets the trending Wall Street bets movement behind it if it could start to move. But there's no doubt this is just an opportunity.
Yeah, it's probably going to require some more patience. This is me not necessarily looking for the move back up, but really just getting into something that is so super low. And it's a good quality company. Again, another company that makes money. We've talked about this. The theme right now is just getting in good quality companies that make money, given the environment that we're in. And so I think that this just fits that bill. And again, risk reward here just seems too good not to at least scoop up a little and see where it goes.
Yeah. The other thing I meant to bring yesterday and I didn't, was Visa. And I just wanted to get your thoughts on Visa. A little bit surprised on Visa. I have really high optimism around this, but Visa had took a huge hit when Amazon announced that they would no longer be accepting Visa purchases in UK.
Yeah.
They're walking that back, and apparently they're sort of in the final stages of some sort of renegotiation where Amazon just recently announced that they are actually going to still allow the purchases, and they're not going to ban Visa purchases in the UK. So this bodes really well. Visa is going to be fine long term, and I'm initially surprised that we didn't see more of it to come back, but it also looks like it's potentially set up to start coming back on the chart.
Yeah, I think so. They have earnings next week, so that obviously that'll be very telling on where they're seeing the rest of the year go. As we're seeing some of the other earnings come in, I had American Express calls that are going to expire worthless tomorrow on Friday. So, I was taking the other side of that at American Express, thinking that would be a good one to go with. Unfortunately, it's just gotten hammered with the rest of the market. And Yeah, maybe earnings is where we see this actually start to make the move. So pay attention to these. I think the credit cards in general, I'm sure maybe the earnings on Discover today could give us a little bit of a snapshot on what we could expect for next week. But you have American Express as earnings next week as well as Visa. And so I think the question is, I don't know. I think we'll just have to see what happens when earnings come out and what kind of picture they're going to paint for us.
Yeah, I think the big news today, well, this is the big news today that took the cake. Some of you guys have already alluded to it, and that's SoFi. SoFi, the news we've been waiting for. This isn't something that's a surprise. It's more of when is it going to happen? And that is they received their national banking charter, which allows them to offer more services, revenue stream opportunities, high margin opportunities as a company. This is a huge win, and the market reaction reflected on that. How'd you receive that news?
I have a video coming out this weekend. Jeff Chow, be on the lookout for that tomorrow, by the way. I see him in the chat. What's up, man? I have a video coming out this week, guys. So make sure you're hitting that notification bell on stocks that I think are worth buying at their 52-week lows. And SoFi was on this list. I had it on there yesterday, and then they come out with this news, those figures. I'm a day late and $1 short on that, but I still think it's a great buy. The great story with SoFi is that they have huge growth opportunity, and now they're officially a bank. And give me one bank and that has this, this story behind them, right? There isn't one bank that is really a growth stock anymore. I think SoFi has that advantage. So you want to get into a good bank that has growth potential, I think SoFi certainly fits that bill. And I think even though it's gone up 15% today, just given how much this has come down, and you guys saw the daily chart that I put up just a minute ago, it's been very volatile here. But given how much this has come down from its $24 highs recently, I think this is still a good buy here at $13.95. You look at market caps at 11 billion, which is still really cheap. And I think that this is going to be one worth scooping up.
I agree. It's certainly one to look at, scoop up. There's competing narratives here that I'm curious about. And I want your opinion on. One is the SPAC, right? Like how much is the SPAC labeling hampering stocks like this as far as from the short-term perspective? And while it is undervalued, does it still outweigh something that like Goldman Sachs that's still massively undervalued as well?
Yeah.
But seemingly a little bit safer.
For sure. I think that if you are someone who's looking to be a little bit more conservative, and given how much Goldman Sachs has come down, I mean, it was down 8% yesterday. It's down 2% today. A gross overreaction, if you ask me, on their earnings. Now, granted, they didn't meet earnings expectations as far as earnings per share, but they did come in pretty high on revenue. They beat expectations as far as that's concerned. So if you want a safer bet than that on something that's undervalued, then yes, Goldman Sachs would be the one to go with. But if you want to take a little bit more of a chance on something that has much higher growth potential, then I would say that SoFi would be the play. You could own both of them, and I would think that would be perfectly fine.
Yeah, it'll be interesting. And the whole SPAC narrative really interests me because on one hand, it's like it doesn't really matter because the merger's been complete, but it seems like that labeling has hurt the majority of those stocks that have completed SPAC mergers.
Right.
But we'll see. I mean, certainly one we've had our eye on and we've talked about. This is huge news for them. Congrats to anybody in the crew that's had them. We had a few people, PW Coaching, G Money, somebody else. I can't remember. Also
Shane Haley, I saw in here, had calls on this.
Yeah, so housekeeping took profit on it. But yeah, we'll see. A couple questions I just want to shout out. Jeff Chow had a question. I'm going to take that one in 1 second. Sam D, could you please talk about Lucid? I heard there's an IPO lockup expiring today at 11:59 p.m. in the billions. Where do you think it's going to go tomorrow?
I don't know. What do you think?
I have no idea where it's going to go tomorrow. I think generally, like the looking at it more from a long-term perspective, I think you more have to establish where you want, where your supports and resistances are at. Listen, to play the guessing game doesn't necessarily matter.
Yeah.
The day after, I have no clue. Now, obviously, the further you get away from the lockup period, the better. Lucid, we've seen stocks like this have huge opportunities for volatility, but I think you have to remember the situation currently. The situation currently is companies that aren't profitable, companies that are speculative in nature, companies that are growth driven are gonna be facing challenges. So you're trying to compete with the EV hype against the general sentiment of the market and the thoughts around that. So to be clear, I think he's saying Fat Man Zoom to ask you this question. So what are your thoughts on that?
So to me, one thing that I always try to avoid whenever I'm looking at stocks to either buy or even swing for short term or what have you, one thing that I always try to avoid is dilution. And selling, with the lockup period coming through, and there's more shares that are going to become available to be traded. The people that have been holding on to this since before the SPAC is going to sell this more than likely. And we see this very often. I would say that it's probably appropriate to stay away from something that is experiencing dilution and then see where the dust settles. You're going to have plenty of time and plenty of opportunities in Lucid, just given their growth story and the trajectory here. If you are a huge fan of Lucid and you have long-term approach to this, then dollar cost averaging makes sense. But in the short term, I still think this is one that I would avoid just for that reason alone.
I mean, these type of things are notes to make to keep your eye on the stock, to watch them. Other than that, you're rolling the dice. It's no different than earnings. So we've talked about lockup periods, and we usually see a pop when the stock IPOs. We see sort of like a die down. We typically say wait for the first earnings. Then we'll see a move there, see where the dust settles. And then the next thing is usually the lockup period as well. But these are just things to keep an eye on. Other than that, you're just gambling. And so you think about who the people that the lockup period affects. And the question I always ask is like, how much are these people aware of the market, and how much are they just like, listen, this is more than what I got it for. I got a bag, and like a lot of these people could just be getting free shares as well through their company. So like they could just be net positive and they just want to get out. And so it's not like they're looking at the technical analysis saying, okay, is this the price I wanted at? They're just going to try to sell. And if they're not seasoned in the market, if the stock does happen to go down, they might freak out and just want to get out, which could exacerbate the movement. Clearly there's a level there. Obviously getting over the 50-day moving average would be really promising. But if it keeps going down, it could fall pretty far down to that 200 average, if not further. So
we've seen it happen before.
So a stock like this, it could certainly happen. But one, definitely watch out on how that plays the news. Next question, Jeff Chow.
Great question, by the way, Jeff.
Opinion on Etsy, down almost 30% on the year. It's my last growth stock, still up 50% on it, but thinking on taking gains and moving into Halliburton Marathon Oil. I have very interesting thoughts on this, and I'm not sure. I'm wondering if they're similar to yours. What are your thoughts?
If I recall, Jeff, and this is a really good example for those of you who have not exercised these strategies or exercise these strategies. But Jeff, if I'm not mistaken, bro, I think that you're on free shares on Etsy, which I feel like we've had that conversation. So if you guys, are on free shares like this, maybe you just don't do anything and let it kind of play out. I would say that it seems as if, and you can correct me if I'm wrong, Jeff, but I think that you have a really healthy amount of value stocks right now. And so I think that it's appropriate, or it makes sense to at least own some growth still. I don't think that you completely abandon it. And given the fact that, if my memory serves me correct, that you are playing with house money in that you don't actually have real capital tied up into this, I think you just hold on to it. Etsy is another company that makes money. And so, when the dust settles throughout all the, interest rate hikes and all the Fed hype surrounding around the headlines, these are going to be the stocks that actually do well. And I believe, if I'm not mistaken, their earnings are coming up soon too. End of the, they have another month to go before we get earnings from them. But I still think that this is actually a great stock to own. It obviously did really well during the pandemic for a lot of reasons, but Etsy is still a huge growth story. And I don't think that there's any reason, if you have if you're in that situation in which that you're just sitting in house money on this, and you have a long-term approach to it, that you just stay in it. You used all the money that you basically made on a lot of these stocks to put it into value, which I thought was a great move. But I don't know if I would take anything off the table as far as Etsy's concerned.
Yeah, I think the first thing stood out to me, which is similar to what you said, is it's your last growth stock. So if you sell that, you are out of growth.
Yeah.
And then your option that you're giving is Halliburton or Marathon Oil, which are absolutely running. To me, you run the risk of chasing your tail. Like Marathon has been on a massive tear, and we've talked, it could still move up and it could still do well, but it's already had a massive move up. So you're taking a stock that has eaten into your profits and you're cutting that. Yes, you're up 50%, but depending on your horizon, Etsy's going to be just fine.
Yeah.
Free shares for sure. If you're scaling in, like, I think the question I would ask of you is, if it was not 50% and if it was just you thinking about a position, what would you do? If you're up 2%, right? Like, there's an argument to be made. Hey, it could drop down further, but if you have a longer time horizon, if it dropped down further, waiting for the bounce, I would look for a dollar cost average opportunity as it makes its move back up. So
yeah,
really, I think it boils down to, what is your horizon? What is your patience level? If you want to sell out, oil's not bad, but you've now further disrupted your diversification and you have no growth. So like, what I wouldn't want to happen is you chase Marathon Oil for 10 or 15%, and then you end up missing the growth bounce back. And now you're chasing that when it comes back another 40%.
Especially since you're already up double on Etsy as it stands right now, which is crazy.
Yeah. Yeah. I mean, I like Etsy. It's going to be a challenging earnings potentially, but it's come down so far, and I just, if you have the ability to just wait, there's nothing in the news that is essentially should make you feel bearish on Etsy.
Yeah. I mean, if it was a company that was continually reporting losses, maybe a different conversation, but they're not. And so I think that this is actually worth hanging on to. What are their fundamentals? Let me look here. 53 times next year's earnings, which is still expensive, but when you compare it to all the other e-commerce platforms, it's kind of like right in line there. So I think that you're fine.
And if you do, I would say there's other growth stocks that are really good opportunities that I'd probably prefer as well. And sort of, that's sort of getting into the other thing I wanted to bring to the table. A lot of people talking about Microsoft, an opportunity to get into that. You're in it, right?
Yeah. I'm in it big.
There are so many good Meta platforms. Looks like it's trying to make its way back. Apple's even down. We're talking about Amazon being down. So like, those are even really good opportunities that they still have upside. So asking yourself, what's that upside, would be good. So,
yeah. I mean, we had this conversation in our Discord, which, by the way, if you guys want to be a part of that, make sure you're hitting that join button next to subscribe. Tomorrow, I'll be going live and showing you guys the portfolio and the roller coaster ride that's been on over the last week. So if you guys want to check that out and tune into the private live stream that I'll be doing tomorrow after tomorrow's public live stream, make sure you're hitting that join button next to subscribe, or going to ownthechaos.com. But looking at this, we had this conversation and I was like, if you asked me if I'd rather buy Microsoft after it's come down 15% or buy a Fastly that hasn't really, has only gone in one direction, and that's down for the last year, I'm going to buy Microsoft hand over fist. It's a better company. They have lots of growth potential still. They have cash on hand, so they don't have to worry about going into debt and paying more on interest for the interest rate hikes that are, that we're seeing on the 10-year. So, the growth potential here, I think, would be much better served. I'd feel more comfortable owning something like a Microsoft that's come down this much versus something like a Fastly or a Teladoc or what have you. Again, there's going to be a time to buy those. I just don't know if now's an appropriate time when these huge big cap tech stocks have come down a strong, what am I saying? A lot. They've come down a lot from their highs.
Yeah. And we've talked about a few. We've talked about American Express, Visa. So like, what's out there that you like, that you're interested in? And I mean, as you're talking, I was thinking about Amazon is in a very similar space to Etsy, and Amazon has massive upside as well. So like whether, what we've talked about the impending catalyst on there as well. So if you are just uncertain about it, I think maybe even looking into something like that could be a potential opportunity.
Amazon being down here at 3,100 is nonsense.
It is.
It's just crazy.
It is. It is. Their earnings are going to be interesting.
Yeah. And you know what else? Like this is probably gonna be a precursor to this weekend's video, but PayPal's 52-week lows. Another one. Like just I would rather buy PayPal than buy Snapchat right now. And that's just, I mean, if I was to buy something that has come down so far that's sitting at 52-week lows, I would much rather buy that than, something that's been speculative. And I get it. There's been a lot of folks that have kind of been buying up stuff, that started trading during the pandemic. And it's like, man, they've got me this far. Like, what can I do? But you look at the multiples on those, and it's just like, it does look attractive, but there's still a lot further that can come down, even with the move down that they've had. And they're still not reporting a profitability. So to me, I would much rather own those. And Tesla's in that conversation too. Like I'd rather buy a Tesla here now that it's fallen down below $1,000 a share.
Jeff Chow said, I guess I'm a little confused on what is considered a growth stock. That's a good point. That's a very good point. I think when you're thinking about growth, you're not necessarily there. Don't confuse undervalued with growth.
Yeah.
Right. Like if a stock's undervalued, it's more about what the business fundamentals are doing, what the scale of the company is, and really is what you're going to want to look at is like when we talk about, if you look like a Microsoft, or you look at an Apple, like where it's been around so long it feels like a value stock. At the end of the day, companies that are reinvesting their capital to generate more revenue at a greater pace than the market. So like these companies that have 30% margins, those are examples, or 30% revenue growth or whatever. Like those are examples of companies that are growing. So really looking at revenue growth, looking at EBITDA growth, looking at their financial situation. And then a simple thing is like, what are they doing as far as with their cash? Like there's companies that are giving it back to their investors in the form of dividends, potentially buybacks. Or they're companies who are like, you know what? Then they can't listen. Apple gives buybacks, but they have a very, very small dividend. They could give a much larger dividend.
Yeah.
But they're buying things, and they're deciding to reinvest it in the company. When you talk about value versus growth, it's that end of it, not necessarily the technical chart and something that's undervalued or beaten down. That's what you're looking at, is like, where can the revenue of this company go? And if you think about the revenue of Apple, it's only going to go up. Tesla's the easiest example of a growth stock. They're not going to give a dividend anytime soon, likely not going to buy shares at these levels, buyback shares. They're going to continue to invest their capital in production and things that'll build more cars that will lead to more sales.
Yeah. I mean, I think the way that I look at it is, if you are looking at something like AT&T, for example, what's the growth story there? Are they going to continue to expand and attract new customers and what have you? And the answer is no. They've basically grown as much as they're going to grow. And so now what do you do? And as Fat Man Zoom was alluding to, paying them back via dividends. It's a good way to earn an income if you're investing in something like Verizon or AT&T or Berkshire Hathaway B shares or something along those lines. You look at something like an Apple or Tesla. The growth story there is still in the early innings, and Amazon, believe it or not, is still growing at a very fast pace. And so those are, particularly tech, is usually a growth stock. And ones that maybe would be value would be like an IBM or Cisco or something like that, that's been around for a while, that just has slowed their growth, but they're continuing to do business and they're continuing to do well and thrive, just not at the pace that they used to. So all good stuff. There's a great question, and I think that there's probably a lot of you guys that may have wondered that as well. But that's basically it in a nutshell. I like that Savvy Money Show put this up here just to kind of simplify it a little bit. Growth stock is a company that is expected to generate substantial cash flow and revenue, usually double digits. And you don't see that normally with value stocks in particular.
James Parison. That's a question. I have a position in PayPal. Is it worth getting into Square as well? Wondering what they have planned in the crypto space.
Yeah, with Square, their PE is at 75, and I think PayPal is slightly below that. It's 37. Yeah. So you look at PayPal, I think PayPal is the cheaper one to go with. Square's definitely got the growth story there, but I think that Square could potentially have some more room to come down. But PayPal to me makes no sense with it being down here. It's trading out 37 times next year's earnings, and I think that given the way that this has moved down, it now hit 52-week highs just today. I Square did too, but I don't know if it makes sense to own both of them. If I had to pick one right now, it would be PayPal. Which is a change in tune, by the way, because I like Square last year with the trajectory that they had, but things have obviously changed, and we got to be able to pivot. And so I think PayPal is the more valuable stock here.
I think you pick which one you like best and stick with it rather than try to get both. They're going to move probably similarly in general.
Yeah.
But if you literally I like PayPal better, I think PayPal is the better buy. But if you look and you just want the story of Square because they're kind of going in different directions, then do that. But it sounds like you are into PayPal. I don't see why there'd be any reason to move over to Square, and you're going to have probably similar movement. Just continue to build your position in PayPal. So,
I mean, the charts almost mimic each other.
So the market is now closed. We'll turn our attention to earnings. Appreciate the questions, guys. Make sure you hit thumbs up as we move towards the earnings reaction. So we have United, which we'll start with United. We have Alcoa, and we have Discover.
Yeah.
This is probably well down the totem pole, but United and Alcoa.
While we're waiting for those to start reporting, Fat Man Zoom, real quick, just the topic of the day was really the Qs. Nasdaq
that's probably good for us to go over.
Is officially gone into correction territory, and we come to the Nasdaq 100, which is the QQQ, and it is falling out of the trend now. We talked about this Stock Watch Sunday, and I wasn't willing to say that we were going bearish, just yet. But I think that you can safely make the argument that there's potential for this happening. Now, I will say that while it has fallen out of this trend, and this has been a beautiful chart, really since the beginning of the pandemic or the bottom of the crash in 2020, this is the first time it's really kind of fallen out of this ascending trend, the Nasdaq 100. But you look at this, and it's officially corrected around, I think, 11, 12%, if I'm not mistaken. And now you're looking at this, it's sitting at the 200-day moving average. So we're at a really key level here. Yes, it's out of its trend, but that doesn't always tell the whole story. It is sitting at its 200-day moving average. We are approaching oversold levels, which last time we've seen this, we've seen really nice, generous bounces. We're in the middle of, or the start of earnings season. So there's a lot here to like about these levels. I think there's potential that we could see a nice bounce. And obviously, it could be short-lived given a lot of the volatility that we're expecting going into March, April, May, and really the first half of this year still. We're just getting started in 2022. But Fat Man Zoom, I feel like there's potential for a nice bounce here. It could get ugly if it breaks that 200-day moving average, and I'm not discounting that. But I think that with the anticipation of earnings, and earnings are really kind of expected to see nice numbers, there could be potential for a nice bounce from here.
Yeah, I think you look at a company, we already mentioned Microsoft, but you look at a company like Apple, that could really turn around the tide in this one, because Apple's already sort of alluding to the fact that their app services revenue continues to outpace growth, and should go above analyst expectations. So hopefully the earnings are what puts that on track, and I would agree. It looks set up. Obviously a key area to keep an eye on. This could get uglier, but I feel like a bounce is in order.
Yeah. Mavis Beacon, I just wanted to touch on that. I said totally say the market is officially bearish. I just wasn't really willing to say that it was officially bearish. I mean, there was nothing on the chart that said it was officially bearish. Right now, it is actually out of the trend. When you said it last week, it wasn't. Now I'm with you. Now I think that there's potential for the move down because it's actually out of its trend, whereas back then it was not. So we're still above the 200-day moving average. So that's kind of the next key area that I would certainly be paying attention to. But to say we're in a bear market, I don't know about that. I don't know about that.
We're looking at the Qs, which is the Nasdaq. That's the chart we're looking at right now.
Yeah. The Nasdaq 100 right here.
All right. So as far as I just want to give you guys the numbers for United Airlines. This is going to be, I think we've talked about this earlier this week. I even said it on Stock Watch Sunday. I think today's like the pivotal day, and tomorrow's going to be sort of the icing on the cake with Netflix. But airline earnings, I'm very interested to hear what happens. But United Airlines, we've talked about Delta, a little bit about American Airlines, Spirit, Boeing. United Airlines earnings per share, a loss of $2.09. Revenue $7.96 billion, which would be up from $3.41 billion last year. How much do you think United Airlines can play if they have a massive beat as far as the overall market and general sentiment around airlines? Are they big enough to sort of make that move, or does it have to be like a Delta Southwest type?
That's a good question. I still am hesitant on the airline industry only because of the costs that they're incurring. They've really had a really rough time with it. Obviously with costs incurred because of COVID and safety precautions that they've had to take. And then obviously the staffing shortages have been a problem. And now you have oil that's going through the roof. And I don't know how much of that they're going to be able to pass on to the consumer until it gets to be too much. And so to me, I think that there's still some real danger here owning any of the airlines. UAL certainly fits, falls into that category as well. And I still go back to Delta being the only one that's projected positive earnings this year. So I still, every time I look at them, that's kind of like what prevents me from pulling the trigger on any of them. So I think that still for me, it would be worth it to just go for something like a Boeing or Spirit Air Systems over the actual airlines just yet.
I can't, especially because they're not anywhere near profitability again. I can't see it really moving the needle. Obviously, it could provide some brief optimism, but I don't know what they could say that would really sort of blow the doors off. Because I just don't think it's possible they're going to say anything about profitability anytime soon. And we talked about the fact that I expect CEOs to be a little bit more tempered in their expectations. I think the safe bet is just to be cautious and say, hey, we don't know what's around the corner. So, it looks optimistic, or it looks positive, but it's just, I don't think anybody's ready to start saying that in an earnings call. Like, we're bullish, we're back on track, we're rolling, especially the airlines.
There's too many headwinds, no pun intended, for the airlines right now that I think I would just still avoid them, at least for the time being.
And variables outside of their control,
Correct.
Restrictions, whatever.
Who knows when the next variant's going to come by and crush them again? Like, there's just so much going on there.
Can you put the daily up on real quick on United Airlines?
Yeah.
Okay. I was curious where it was from.
Still on its downtrend, and we're still seeing lower highs and lower lows. It's just been rough.
Yeah. Alcoa, though, I think this is probably one I'm more excited about today.
Yeah, me too.
Because I feel like Alcoa could make a really nice move, and I think they could provide a lot of optimism around their earnings. So as it moves down, which it's the first initial move, no big deal.
Yeah,
that was just funny. We saw a nice spike down, but I really feel good about their earnings.
I feel good about the materials in general.
Mm-hmm.
Obviously aluminum, there's been an aluminum shortage. I don't know how much recovery we're going to see, and the demand's certainly still there. And it's looking like it's reversing course here a little bit. So looks like maybe those numbers are out. As soon as we get them, we'll certainly share them with you guys. But I feel good about the materials in general. Steel, also, we still like Cleveland Cliffs, even though I don't think either one of us are in them. It's just hasn't really seemed to have found a bottom yet. But those earnings are about a month away too. So yeah, I like materials in general. I think they still have a good year.
And as far as their expectations, earnings per share expected at $1.91, revenue $3.33 billion. I think they beat. I think they beat handily. And just so I throw some numbers out there, I think 202 they come in at earnings per share, and I think 3.5 billion would be, well, let me just say 3.48 just to be a little bit more exact.
Yeah.
Beat on revenue, but I expect them to beat on both.
Right now, it's looking like it's trading up around 2%. Some volume coming in here, so I'm wondering if the numbers are out. But again, as soon as we get them, we'll share them with you guys. But I don't disagree with that. I think that's going to be a pretty pretty good number.
I got the numbers.
What you got?
$2.50 earnings per share.
What was the expectation again? $2
$1.91.
$1.91. Okay.
And which is a really great beat for them.
Yeah.
Revenue 3.36 billion, which is also a beat, slight beat. So they beat on both.
Beat on both. Obviously, there's a lot more factors here that would either move the stock up or down, guys. So as we always talk about in earnings, the outlook is really kind of the most important thing here. So as the outlook numbers come through, we may or may not be live when we get that part of the report, but that's really going to tell the story. I still feel good about Alcoa in general, and so this will be interesting to see how it plays out tomorrow. It's obviously had a monster move and has done really well, outperforming the market last year and this year, it looks like. So this, to me, I think is just going to continue, and I wouldn't be surprised if we saw a move up tomorrow as well. I would be really shocked if we saw some sort of downgrade in guidance on this.
Yeah, I would too. And just to be clear, those numbers I got, they beat. There are some people that saying analyst expectations were 3.36 billion, which would mean they would miss on revenue. So just be aware of that. Either way, it's essentially in line.
Got it. We look at the chart right now, and if there is any kind of pullback, looking at a support somewhere around 57.75, which is kind of where this top was here. And you can see that it came down and retested that to act as support after it broke through that resistance. So logically, to me, that would be the next area that I'd watch for if we do see a sell-off. But right now, it's trading back down. So still really choppy here.
Oh. We got so close. I thought we were going to make it through the whole stream, but we're going to go ahead and cut it there, guys. We're going to go ahead and sign off. Still working through those issues. I actually had somebody reach out to us via email. I'm going to reach back out to them to see if they can help me with this problem. But, man, so close. But either way, guys, we're going to let you go. Thanks so much for hanging out. Make sure that you go and check out the join button to join the channel to get our daily watch list, as well as I will be live Thursday afternoon after our live stream to go over my personal portfolio for our Chaos crew. And that's going to do it for us, guys. Thanks so much. We'll see you tomorrow. Freddie will be here. Lots to go over tomorrow as well. And Netflix earnings will be after hours. So we'll be giving our live reaction to that too.
That's funny, Savvy. I like that. Bye.
See ya.